Gives me great pleasure now to bring on board Jim Rogers to talk about what he feels where markets are headed after a rather volatile and unpredictable 2022. What is in store for us in 2023? Jim, good morning. So nice to have you back.
Good morning. Delighted. I'm a fan of ET now, as you know.
Well, Jim, it's been a year where we started with the inflation concern and we are about to end with recessionary fears. What do you think would be the dominant theme of 2023? Is a global recession around the corner? If it is, what it means for financial markets?
Well, there's been so much pessimism around that usually something happens when people are this pessimistic, and then we become optimistic for a while. So I would suspect something is going to happen, whether it's peace in Ukraine. That's not a prediction, it's just an example. But if there were peace in Ukraine, or if the central banks got worried and stopped raising interest rates so much, everybody would be optimistic. We would have a big rally. In my view, it would be the last rally. So I guess the theme of 2023 will be the last rally.
I think it could be the last rally.
Well, the last big rally, not the last rally in the history of the world. We'll have many out. We have many more bull markets in our lifetimes.
But even if you say the last big rally, why do you think it could be the last big rally?
Well, the American market, I'm using America because it's the largest, has been going up since 2009. That's 14 years. That's the longest in American history anyway. I mean, you could go up 24 years. It doesn't, there's no rule, but we are getting late in the day historically. Interest rates are rising because of inflation. They printed staggering amounts of money. Whenever you print huge amounts of money, you have inflation. Whenever you have inflation, you have higher interest rates, and higher interest rates are usually not good for markets.
What are the chances that in 2023 China comes back? And if they come back, they will be coming out after almost a 2.5 year long quarantine. When Indian economy opened up after 3 months of quarantine, there was then demand explosion. If Chinese demand comes back in 2023, could that surprise everybody?
Well, most countries have ended the long quarantine periods. Even China, which was the last holdout, is now opening up. So that part of the virus, that part of the epidemic is probably behind us, or soon will be behind us. And that is one reason we're having this rally now. People are starting to go out, spend money, they're feeling better. And that is contributing to the last rally, in my view. But you should watch ET now. They'll tell you what's going on.
We are watching ET now. Our viewers are watching ET now to figure out what is going on. So we would like to ask Jim Rogers the very same question with all the news that's coming out from China as well. The easing of the curbs today morning as well for COVID-19, the noises that they're making for maintaining monetary policy as well. Jim Rogers, the trend that started a few weeks ago of fund managers increasing allocations to China, do you think that's going to be the trend very much in 2023? Can India be the best performing stock market in 2023?
Well, the Indians have done a very good job. You all have done a good job, as you know, better than most. And so I commend you. I hope that you continue. I hope that everybody continues to have a good time and a good market. But I repeat, it's been going on a long time. It rarely happens in history. I would love for India to continue to boom. I would love for all of us to continue to boom. I'm a little skeptical because it's been going on so long, and there's so many new people coming into the market, and so many new people who think this is so much fun and so easy. Whenever you hear people talking about how easy it is, you should be worried.
Jim Rogers, so as you are worried, can I ask you, what are you doing? Are you taking cash off the table? Are you looking at other asset classes? I'll never forget how you, went big on silver, for example.
Well, sometimes I get it right, but I promise you, I make many mistakes in my life and in my investing career. We could have a week of programs about my mistakes. I will remind you, I can talk about my first wife if you want to. What a mistake that was. What a mistake. But what am I doing? I'm mainly doing nothing right now. I'm mainly watching. I do own commodities, which usually benefit when you have inflation. And I have not been buying stocks. Well, I bought some stocks in Uzbekistan, but that's barely enough to talk about. I am looking for opportunities always, but most markets are still very strong, and I don't like to buy strong markets.
Jim, still bullish on agri commodities?
Am I what?
Are you still bullish on agri commodities? You've been a long-term fan, haven't you?
No, yes, yes, yes. Agriculture's been a disaster for a long time. You're in India, you know, one of the great agricultural nations of the world, at least historically. No, agriculture's had many problems, and usually that leads to opportunities. I'm not going to become a farmer, but I will try to find more agricultural investments.
So give me the most opportune trade across the commodities asset class right now, including precious metals, agri-commodities, and crude.
I would say agriculture. Agriculture has been a disaster for a long time. Maybe silver. Silver's down 70% from its all-time high, and that's obviously not a bubble if something's down 70% from its all. So I'd say silver or agriculture. I'd have to think a little more, but those are the two that come to mind.
Jim, what's the outlook? Because I wanted to get in your views on, real estate as well as an asset class. You had mentioned that, property prices are pretty expensive here back home. Does that view still hold?
Well, as you know, there are lots of real estate markets in the world. The world's a huge world. Some places, New Zealand, Korea, have been having bubbles in property. Parts of India have been having a bubble in property. China was having a bubble in China. A bubble in real estate. So if you find the right places, if you can find farmland in India, for instance, that's probably not a big bubble right now. But most property in many countries has been in a bubble or been overpriced because of very low interest rates. Interest rates have never been this low in history, and that leads to people investing in property.
The dollar index as well has been gaining quite a bit of traction. What's your outlook there?
Which has been gaining traction?
Dollar index?
Well, I own a lot of US dollars, as you may remember, I have for a while. It's starting to calm down, but people, whenever there's a problem, turmoil, they invest in a safe haven, and people still think the US dollar is a safe haven. It's not, but people think it is, and so I own a lot of US dollars. Unfortunately, I think we're probably coming closer to the end, maybe the end next year or so for the US dollar. It's been very, very strong. What I suspect will happen is when the markets get bad in a year or so, whenever they do, the dollar will have one big move up, and that will be the last move for the dollar, and I'll have to sell my dollars. I don't know what I will do with my money when I sell my dollars. That's a problem, but if you have any suggestions, please do not announce them on ET Now. Please send me an email, because I'm looking to do what I will do with my dollars when I sell them.
Jim, when there is inflation, it is a bad idea to sit on cash. But now with US bond yields at 4.5% or 4%, do you think a lot of money which has moved to the dollar index, money which has been in other asset classes will go back to the US Treasury? Because 4% yield, if inflation has topped out, I think is a reasonable yield.
Well, if you have cash during inflation, obviously you're falling behind, but interest rates usually, short-term interest rates usually adjust and go higher, so even your cash will not suffer that badly. But I will tell you again, it's better to own cash and earn very little money than to invest in stocks or something and lose 10% or 15 or 20%. But bear markets can be very, very destructive to people. So if you're in the wrong assets and there's a bear market, you will lose a lot of money and you will wish you were in cash. So yes, I know the arguments against cash, but I also know the arguments for cash unless you have something else to do. If you don't have something else to do, put it in cash.
Okay, if you have nothing to do, put it in cash. Cash is better when there is a bear market, and that's what Jim Rogers is now worried about. That the valuations are high. We could be bracing ourselves for a sell-off, which we should prepare. Jim Rogers, an absolute pleasure talking to you. Thanks so much for being live with us here on ET Now.
I am delighted. I'm still a big fan of ET now.
Awesome. Look forward to the next interview.